podcast is now starting. All attendees are in listen-only mode.
Good afternoon, good morning, and good day to everybody that joined. Thank you for participating in our educational webinar today. This is Adil Khan, CEO at SafePaaS, and our topic today is preventing the control violations and eliminating expensive detection and remediation cycles. I know that's a topic that has often come up in our discussions with our customers and partners. And talking to partners, we're really excited to have Focal Point join us today. And Yanni, whom I've worked with for many years and known him for many years in the industry, many of you recognize, I'm sure, as well. So we're really fortunate to have a great partner that specializes in this area. And we're going to hopefully bring some new insight from the field on this important topic. Just from a logistics standpoint, you guys are in listen-only mode for the purpose of, so there's no voice interference and so forth. But please feel free to put your comments in the comment box on the right window, and we will take your questions at the very end. And we have about 45 minutes. The conference will stay on till about an hour, but we'll try to give you 50 minutes back and try to wrap it up in 45 minutes, this important topic. So with that, let's jump right into the topic. Here's a quick agenda. We'll do a quick introduction. We'll talk about internal control types, give everybody a time to kind of baseline our lingo and our jargon and down to plain English as much as possible, and then talk some case studies and take your Q&A at the end. So that's today's agenda. With that, Yanni, if you can introduce yourself and your firm, please.
Thanks, Adil, and look forward to talk to everybody today. Focal Point is a risk management consulting firm. We look at risk end-to-end, from helping you to identify the risks, to what are the risk mitigation actions, to actually help you with the third line of defense, doing the internal audit or outsourced internal audit with clients. Been around for about 14 years now, with about 17 offices across the US and doing a fair bit of international work as well. So as you can see there on the slide, a fair number of different things that we get involved with. As I said, from cybersecurity to identity management to workforce development, training your teams on security. Adil, let's move on then and get into the details of this.
There you go. A quick intro on SafePaaS. We have been around about the same time as well. Most of you have been on these webinar series, so I won't bore you with the same details, but about 250 customers worldwide, mostly in US, across major industries. We're pretty active in the user community. Gartner has recently ranked us as one of the most complete multi-platform solutions for ERPs, controls, including segregation of duties, transactions, configuration, and so forth. We will be at Collaborate for those of you that are going to the Oracle Annual User Conference. I'm also on the board of the Governance, Risk, and Compliance, and I look forward to seeing you this year in our travels, whether it's at the next conference or the future ones. And please stay tuned for our future webinars as well. So thank you for your participation today. With that, let's jump right in. So I'll turn it over back to Yanni. Yanni, if you can take it away.
Thanks, Adil. So, of course, do we need to look at COSA when we talk about controls? And the first question is, let's just, as we're going to talk about preventative and detective controls, what is a control? That's really the part of the process that you're going to use to have in place to give you reasonable assurance of your information, whether it's financial or operational of nature. So if we then go on to the next slide and actually look at what are preventative and or what are the controls. So if we say, why do we need to talk about risks? And if we do talk about risks, what do we do about it? Are we going to prevent it? Or are we going to find out afterwards in the Wall Street Journal or in our reporting what happened. So the way to look at it is really to be as much as possible proactive, have preventative controls in place, and where needed, supplement that with detective controls. So think about it. What does it all mean for us? How do we build those preventative controls into our environments? So let's talk a little bit about what preventative and detective controls are in the next slide. So let's prevent it before it happens. So maybe look at new user accounts and approve it and make sure there are no segregation of duty violations or any super user access as we approve that user account. That prevents anybody from doing anything that they shouldn't be doing, or alternatively, we can go and review this afterwards. The problem is the access already happened. They've already done something. So this is really, how do we prevent that and prevent that loss from happening, financial loss, or anything else from happening before we actually get into it. So it's a concept of, let's stop it, or oops, it happened, now let's go and fix it. So if you think about that, let's go and stop it before it happened. If we go to the next slide, and I'll talk a little bit of a couple of examples in our best practices. So, and of course I need to use three-way match. That's probably the one that's been most talked about in every organization, especially if you deal with goods in your organization. So how do you look at the concept of three-way match? Make sure that your goods received are actually received as said in the invoice, and your goods received note and your delivery note, and that's what you pay. You only pay for what you actually received. So you can do that by actually setting up a number of configurations in your Oracle EBS environment or any of your ERP environments. That includes enable three-way match to set up the tolerances. So will I allow a 5% or a 10% tolerance, so over and under? Those are a number of different, call it configurations or controls that works together to actually get you the three-way match control. What does that do for you? It helps you that you don't overpay or underpay. You don't have excessive goods received. So you pay for what you received. So if you guys think back on what we just talked about from preventive controls versus detective controls, I prevent from paying for things that I don't have or overpay for it. Instead of finding out afterwards when I do a review of my payments, I have now paid excessive amounts of dollars for things that I've never received or services that I never received. Prevent that money from going out of the organization in the first place versus looking at finding out of it afterwards. Same with pricing rules. I have a risk that I have not charged the right price, or some of my teams can give excessive discounts or just fat finger the price in if they have to capture the price. But if I have appropriate pricing rules in place, I will charge the right price. And I will make sure that I can control my margins so much more effectively. Again, I don't need to go and look at the end of the month or at the end of the quarter on the margin variances and see, oops, I'm running at a loss there this month. I can prevent that from happening in the first place. So then another example that we can talk about is journal entries, which is probably the most looked after and audited part of any organization if you talk about your general ledgers. So at the first place, I can look at, if we talk about EBS, the account code combinations, make sure that those are the right account code combinations that's being used when I capture my journal. Make sure that we capture That gives you, again, address the risk up front, make sure that the posting or the correct accounts are used as we go through that process. Now think about that. If you didn't do that up front and you have to look at it afterwards, it is going to write a new number of journals to fix it. So do the preventative controls, prevent it before it happens. A lot easier and a lot cheaper to maintain than doing it afterwards. So now, yes, these things look very obvious, easy to figure out, but it's all about a couple of things that need to be in place for you to have this. It is configurations in your ERPs and EBS. It is also making sure that you have appropriate change control in place so that somebody can't just go and change the configurations of three-way match. Go and change the tolerances. So if I change the tolerance suddenly to 30 and 40%, the three-way match automated control means nothing. But if I have the appropriate change control and make sure the appropriate access that people can't go and change this three-way match configurations, and there are a number as I refer to, or the pricing rules, or the validation if I look at my cross-validation rules. So have these things up front, prevent things from happening, a lot cheaper, a lot more effective to have in place. Unfortunately, it's not always easy and possible to have just preventative controls. Oftentimes you need to look at things in combination with detective controls to make it more consistent. So let's look at a couple of examples of detective controls where you just don't have a choice, but you have to go and look at that. So if we go on to the next slide, you guys will see a couple of examples. So we put our payables on hold and we created hold rules for the holds. Well, those holds need to be reviewed. We can see that this detective control, although it is reviewing a report, it happened afterwards, we've put the hold on place, it's still helping us to look at the controls. We put a control in place to put a payment on hold, and then we go and review it. We're going to look at master file changes. Sometimes it's not practical to have everything with a preventative control, especially if you've got high volumes of changes. So you can go and just focus on a list of changes and you make that time period short enough to get you to a more acceptable risk level. Or you can go and do your reconciliations. So I hope that everybody get a feel for yes, you have your preventative controls and you need to have them in place as you go through the process. And you need to, some of these are reports, some of even the detective controls are configurations that you rely on to actually pull reports, like the payables hold report. But use these two in combination and you actually get to a pretty strong control environment. Use just one or the other and you don't necessarily address the risks that you've identified as you go through your organization and your processes. And you'll see as we go through this, Adil is actually going to show you in a couple of slides how it looks like, how do you monitor this, and how it's configured in your, can be configured in your environments. So with that, let's move on to the next slide. And as I've just mentioned, controls in practice, you can't have just the one or the other. You really need to look at both. And the two together gets you to a point where, if I can read the last sentence of that slide, rather management should focus on whether the controls in place are sufficient to ensure that there are no misstatements of the financials, and really address the appropriate risk in terms of your risk environment. Also very important, think about that from an operational point of view, not just your financials, but your operational controls that you have in place. This tends to give you a much more effective view of your risk and what's your residual risk in your organization. And if we now move on to some of the examples of Adil, where you're going to show us how this looks like in SafePaaS.
Thank you, Yanni, for framing the business case for a preventive controls approach in combination with detective controls. So what I'm going to attempt to do in the next few minutes is give you some examples of how that is happening in practical experience working with our partner Focal Point, and also share a case study to give you some real world examples of how you can learn from today's session and actually apply that in your business. So if you think about the procure to pay cycle, Yanni, you pointed out some of the examples of control. This gives you sort of the front to back view of a typical procure to pay cycle. You go through requisitions, issue purchase orders, receive the goods, invoice are received, and payments are issued. We talked about a three-way match. We talked about pricing and so forth. And these are all control points from our perspective when we think about a process. And choice is yours whether you choose that to be a detective or a preventive control. Without spending too much time on the full control list, some obvious areas in this flow are around supplier setup. So whether we're setting a supplier that is within the acceptable criteria, not blacklisted, for example, are they suppliers that are often changing? Are they shipping their products both from quality and controls perspective? So typical and simple data quality too in terms of duplicate suppliers. So these are the types of tests that most customers are doing upfront to prevent from having risks that are identified on this slide. Now, once the supplier is set up in the procure to pay cycle, the next is issuing a purchase order to them and making sure that those purchase orders meet the requirements. I've highlighted split POs, which is a common problem that we see in customers that use enterprise systems. Even with all the standard good controls they have, there are ways to get around those systems. And I've got an example in a minute to share with you where you can basically get around the approval hierarchy limits and issue two POs, the combination of which is greater than the approval hierarchy, for example. So $10,000 your limit, you have a P2, you issue two POs for 8,000, and now you've gotten around the procurement limit. So those are some common examples of where you need these type of advanced preventive controls and even detective controls where your standard controls in ERP are not sufficient. I won't go through every control, like I said here, but just to give you some idea and material, which is also going to be made available online for your download if you're interested in following through on this in your organization. So making, from a good reception standpoint, being able to make sure that you're not duplicate paying the suppliers. Freight charges is a good one. I see this a lot in certain industries like retail, where you have contracts for let's say you're a shoe company and you're shipping the product from China, and the subcontractor and subcontractor have differences in the way the freight is to be charged, and you are paying twice for that freight. So just a real world example from a customer of mine on the West Coast. So yeah, these are some examples of control. Now, I picked an example of one of the biggest success stories we've had in the market, and that's basically a state of Pennsylvania. They have published this report in Forbes magazine, and it's a very interesting story. The company, or not the company, but the organization is responsible for safeguarding about $120 billion of public funds, right? So they basically, it's the Treasury Department that distributes the funds to various entities, government entities. So all the payment process runs through it. So it's a kind of a classic example of a procure to pay cycle and a complex one. So by presenting this as a case study, I thought it'll help you scale it to your, your challenges in the business. The challenges when we walked into their business was that they had a number of legacy systems that were involved in the different aspects of procure to pay cycle, all the way to the auditing of those systems. It was some kind of a homegrown audit system, and what had happened over the years as agencies have automated around different environments, different ERP systems. There were 28 different agencies that were using a hodgepodge of whatever system they had selected over the last decade. So SAP, JD Edward, I think PeopleSoft was more popular, and so those combination of those systems enabled the agencies to generate voucher requests and send them to the Treasury Department for payment. And the way that payment was tested was in a detective mode. Now we have the payment requests come in, so the supplier is already set up, the PO is already approved, and now it's the tail end of the payment process. And at this point, the challenge was that because they had grown to, I think, 20,000 transactions a day coming in, there was not possible for 60 or so auditors to be able to test every transaction. So they were using the sample-based method, which is the typical reactive method of doing it. It's how we grew up in audit, using that approach. And they were applying some pattern recognition and distributing that to different groups. So we leveraged Oracle technology and our procurement management capabilities to build out a solution that now prevents those duplicate payments or suspected duplicate payments or suspected payments, period, based on a number of controls that we identified, which reduced their errors by 5%, right, which was almost $30 million. And that if you Google that in Forbes, you'll find the article that explains that with the Treasury Department. And so by doing that, now there's also a productivity gain, because what the auditors are able to do now is instead of sifting through 20,000 voucher requests and analyzing it based on samples, they're able to let the system do what it does best with its intelligence and learning capabilities, and being able to identify those patterns. And based on the patterns that are identified with the risk, they can go into the enterprise system and actually put the voucher request on hold. So say auditors can now go and focus on high risk payment requests and analyze them. And that's how they improved the bottom line by $30 million, which in a private organization, as you can imagine, the 10% EBITDA means close to 10x of that 30 million that would be involved in 300 million in top line benefits, right? So a significant savings. Now the way this works is you have standard controls. No doubt today your ERP systems that you invest a lot of time and money have great controls already in place. An example of that is around your purchase order process. So I picked an example, obviously a sample, not our customer data. So this is coming from a sample ERP system where a purchase order can be issued only to valid suppliers. So you can't just fictitiously create a supplier. And if you have good segregation of duties, you will make sure that people, the users that are creating suppliers are not the same users that are also paying those suppliers or even generating invoices or purchase orders in some cases. So it depends on your, of course, risk tolerance and the way your structure and business constraints are, number of resources available. But in the end, you have some good controls already in place. That's the reason you're on this call, because you're concerned about controls and you believe in good controls. So purchase orders require approval, right? So now we not only have the ability to enter a purchase order that's going to a valid supplier, but we have another standard control that makes sure that there's a workflow approval process that the system goes through to ensure there's no errors in the PO. Next, when we're making payments, we have the same situation. We can match as Yanni said, a three-way match. So we can match the purchase order against the invoice and avoid duplicate payments. And we can prevent that because the system will not let us put the same invoice number twice. It will say that's a duplicate, you can't enter that, and it does prevent that from happening today. And to ensure the PO, you will put the PO release information and the shipment information, and that's your three-way match, which, as we discussed earlier, is a key control for almost all well-run organizations today. So good start. You got a good baseline. You just want to make sure that your configurations in the ERP are set up to support that. Now, ERP tends to have thousands of configurations, and being able to ensure that those are all correct can be a daunting task. So for example, what are your RMA policies and routing procedures for goods that are received but they're turned around and returned as defects? Are we really sending them as defects, or somebody just walking out from your warehouse with that merchandise and marking that as a defect? So basically, what you find is that these ERP systems have really good standard controls. However, they're not sufficient or complete in order to protect you against waste, fraud, and errors, right? Because as you saw in the previous slide, I could change the split PO situation where I can issue two POs that make up the approval hierarchy. I can change the configuration and tolerance here to get around the receiving risk, receiving control, and I can also, for example, change the invoice number to avoid a duplicate, a flag, or prevention. I can get around those controls, and that's where we spend a lot of time helping customers identify risk, and then with our partners like Focal Point, and then help them implement these preventive controls to prevent that in the future. And so the final solution sort of looks like this, and that's what I'll explain you in the next few examples on how we do that. Now that you've understood the risk that's obvious in the ERP systems. So we basically build a procure-to-pay preventive control workflow, right? So the different stages of that risk, whether it's the supplier setup process, where the incorrect payments can go into a wrong supplier, the control objectives, and the continuous monitoring. The combination of that, what that does is enables us to optimize your process, improve your cash flow, and prevent leakage. And essentially, whenever the controls are violated, we generate the incidents that are then reviewed by the right control owners, and they can then, through a approval workflow, stop the payments or put them on hold as the end deliverable of this flow. And that enables you to then stop the leakage from the bottom line and improve your profit margin. So as an example, I included a few screenshots. There's more on our website if you want to visit safepaas.com, and you'll find why other customers are doing and how they're doing it. Some case studies out there as well. So this is an example where we're issuing an invoice entry. One is through a manual process, the other one is through the system process, but they're the same amount and they're issued on the same day in the same set of books. And that's a common situation that can occur where you have two different vehicles for payments. So you pay somebody through a wire transfer, but your AP system also spits out a check, or you receive a manual invoice, but you also have a electronic invoice. Actually, an example comes to my mind, not this specific case study, but a customer had recently merged, and both the CIOs were in place, and they both were using SAP, and they both received the same invoice. Obviously, this wasn't intentional, and they both, of course, followed the system and process and paid the invoice. But as you can imagine, it's a multi-million-dollar invoice, and it was caught several years after the merger was completed, and it was difficult to then collect those funds. So that's a common example of duplicate invoice and payments that occurs, that goes around the system because they're in two different set of books. There are also preventive components to supplier tracking. So we can track all changes to supplier data, old value, new value. And as Yanni said, that could be a detective control. Maybe you just review that report once a month or once a week to see if we have some suppliers that are changing their bank accounts very often, or the terms have changed on a supplier for no obvious reason, from, let's say, net 45 to immediate, right? So those kinds of issues can be addressed on a detective mode, but also from preventive mode. If somebody is creating a supplier, for example, with a supplier tax ID matches and the address matches an employee tax ID and address, that might raise a red flag that somebody is diverting the funds from a supplier payment to their personal account or their related party account. And those kinds of intelligent risk and a smart risk analysis is becoming more and more popular. And if you think about some of the recent fraud stories that you might have seen in the paper, you'll find that's an example of where the fraud is occurring in these ERP systems, where the controls in the first place were really good. However, people found out that there are ways to cheat the system. And so, by looking at these types of patterns and what we call fuzzy logic, you can detect and prevent very quickly these types of situations that can cost not only just bottom line losses, but significant reputational risk. So in the end, what we recommend to get to a preventive control approach, you leverage what you have with standard controls, and folks such as Yanni can come in and sit down with you and give you a review of what those controls look like today, and beef them up if required. For example, if three-way match is not even turned on, you should consider turning it on if that makes business sense to you. And our experts like Focal Point can help you move in that direction. Your roles and responsibilities in Oracle or SAP or whatever your system is are set up correctly. So there is that baselining approach, right, where you can go in and just make sure that you have your standard controls set up first, and we provide a number of tools to benchmark standard controls, including segregation of duties and so forth, that partners like Focal Point can leverage to help you get to a clean environment. So that's kind of step one. Now, once you have standard controls that are working effectively, then you can add SafePaaS controls on top of that to get to more of a as I was saying, fuzzy logic, like similar values. So if the invoice numbers have come in from the similar supplier, Acme Electric and Acme Comma Electric, and the invoice number 1000A are being submitted for payment on the same date with the same amount, chances are that's a unusual or a suspect transaction. So you might want to, leverage SafePaaS to put that on hold. So those are some examples. Now, split POs example I've said several times. Segregation of duties, so you have good access controls, again, standard controls in ERP where nobody can get access to supplier data without having a login ID and an active responsibility or role assigned to them. However, how many people have the ability to get access to supplier, to create a new supplier or change the bank account of an existing supplier, and also access to pay that supplier, because that is a potential risk that could lead to fraud, errors, and mistakes that cause the wrong. Same thing with credit customer side. You have customers with credit limits. Let's say you're a global company, which is one of our customers has gone through that, and they have a situation where the ERP system provides them credit limits by country, the way they've organized their ERP system and configured it. But they have customers that are global in nature, and they're buying in Europe, buying in Asia, and buying in US. However, the credit in the US is okay, but in Asia it's over limits. So you could leverage SafePaaS to be able to do global credit limits and being able to control that risk of shipping products globally, which a typical ERP system is segregated by ledgers or set of books or inventory organizations would not catch it. So these are more advanced controls, and in the end, they save you money and save you embarrassment or reputational risks as well. So with that, I'll ask Yanni to make some closing remarks, and we'll close out the session in the next few minutes.
Thanks, Adil. And I think as we went through this, probably the best example of a detective control that we don't want to have in place is the Facebook example. We don't want to read the report in the Wall Street Journal that we had a data breach or people access to our data that we didn't anticipate with just pure unauthorized data without really think about it. It is as simple as we didn't look at who has access to our data, or do they have the appropriate or correct access. So we need to keep on thinking and looking through and be proactive about all our controls. And we talk about here logical access as a prime example as that is a top of mind for all of us. So really, that is what it is. Let's be proactive.
Thank you,
Thanks,
Yanni.
Adil.
Thank you. We have a couple of questions that I'd like to ask you. And those of you that want to learn more can visit SafePaaS and Focal Point websites and learn why customers are choosing us and how we can help you, including a free trial as part of your reward for attending and staying on in this webinar. So Yanni, you mentioned detective controls and preventive controls and how to mix them. That seems like a little bit of art and science. What's your approach? How do you help customers move to more of a preventive approach? Do you conduct workshops? Give us a little flavor of what a first couple of weeks with Focal Point look like on a new engagement.
Sure, and I'll start off by saying is really understand the process. So work with you, whether it's in the form of workshops, whether it's in the form of just pure walkthroughs of the process, but understand the process really well. And with that, then understand the risks in the process. If you have 50 people in a specific process, you're going to approach the process very different than if you've got 2 people managing the process. So understand that, and then understand the industry and the organization specific culture and risks that's appropriate to those. Based on those, we can come up with and understand what is going to be the most efficient way to control those risks and look at how much risk are you prepared to take? How are you going to do everything possible to make it as small of a risk environment, or do you have a little bit more of a risk-based or a higher risk tolerance? Understand those, and then based on those, come up with the most cost-effective and efficient controls in place to address those risks.
Excellent. So it sounds like a lot of that is comes from your experience and your company's experience, combined experience on having addressed that by
Right.
industry. And that's interesting to note. I would agree with it that different industries have different tolerance for risk. An insurance company runs very differently than a Facebook, high-tech, West Coast company. And there are different risk patterns. So that's a very key point that I take away. Now, if I wanted to learn more about how you can help us or do a scoping exercise, is there some kind of an offer for the audience, people that are attending the session today, to be able to reach out to you and maybe have a one-on-one session over the phone, or how does that work? How do we engage you?
Absolutely. Reach out to us. You can either go for our webpage or contact us directly, and we would be more than happy to come out and spend some time understanding the organization and give you some initial feedback in the form of a couple of hours workshop where we just talk through what's your control environment, how do you use your current ERPs, and based on that, we can help you and give you direction on where to go, what to do and what not to do.
Okay, thank you very much for that. And Yanni, last question before we finish up. We have a couple of minutes left. In terms of, I noticed that you guys have almost half the large companies as your customers. So I assume you work with many different types of business systems, ERPs, and so forth. What are some of the expertise in your organization? What are some of the let's just say ERP systems that your organization is comfortable with? If I have SAP versus Oracle, can you tell us a little bit about your skill set in-house as an organization?
Yes, thanks, Adil. We've had the privilege to really work on all the major ERPs, so Oracle, EBS, Cloud, PeopleSoft, JD Edwards, SAP, and we have practices really dedicated to, and also Workday. I should not forget Workday. We run into that quite often with our on the HR side as well. And anything from looking at your control environment and look at whether you've got the appropriate configurable controls, automated controls in place to actually help you with the design of your roles and responsibilities during the implementation, or actually help with looking at your project risk and look at how do you manage the risks throughout the project? Are you taking a preventative, proactive approach in managing the implementation, or actually the project is already in trouble, and what are the things that you need to do to get your ERP project back on track to actually build the controls in during the implementation?
Okay, thank you very much for those answers. I think those are all the questions we have today. I appreciate everybody attending today's session. We will make this recording available to everybody that attended, put the PowerPoint on our websites and user groups on LinkedIn, so you can download that from Slideware. And also, please reach out to Yanni's team or us and learn how you can apply some of these best practices and tools to improve your business in the coming fiscal cycles. Thanks again. We look forward to having you on a future session, and have a nice day.